Hello everyone and welcome to this week's currency market update. Today we are looking at a major development from Japan, where the Bank of Japan has delivered its most significant policy move in decades by raising interest rate to their highest level since 1995. The key question now is, can this historic move finally provide lasting support to the Japanese yen? The Bank of Japan raised its benchmark interest rate by 25 basis points to 1%, marking the highest borrowing cost in 31 years. Interestingly, the decision came in the absence of Governor Kazuo Ueda, who is currently undergoing medical treatment. Deputy Governor Shinichi led the meeting, highlighting that the BOJ's commitment to policy normalization extends beyond any individual policymaker. The primary reason behind the rate hike is rising inflation. Higher energy prices driven by renewed geopolitical tensions in the Middle East have pushed Japan's wholesale inflation to 6.3% in May. Policymakers are increasingly concerned that these higher costs could spill over into broader consumer price. The move also reflects efforts to support the Japanese yen. Despite Japan's recent record currency intervention, the yen has remained under pressure against the dollar. By raising interest rate, the Bank of Japan is attempting to narrow the interest rate gap with other major economies and reduce speculative selling of the currency. However, the decision was not unanimous. Board member Asada voted against the hike, arguing that risks to growth and employment currently overweight inflation concern. This suggests that while the BOJ has established a new policy direction, future rate hike could face greater internal debates. Technically, USDJPY continued to trade around the critical 160 level, which many market participants view as a potential intervention zone. Immediate support is seen at 50-day EMA near 159.75, while the 200-day EMA around 156.04 serves as a key long-term support level. On the upside, a sustained move above psychological 161 level could open the door toward 161.82, marking the yen's weakest level against the dollar since July 2024. So, overall, the BOJ has taken a major step toward monetary policy normalization, but questions remain about how much further it can tighten without impacting economic growth. With USDJPY hovering near intervention-sensitive level, traders will be closely watching both BOJ communication and any signals from Japanese authorities in the weeks ahead. Thank you for watching.